Hello friends, so in this video I took my time to explain the Bollinger Bands strategy in detail, as well as give out live examples by trading this $40 account to 800 using the same method as I was explaining. So I just want you to know that I saw your request, and in my next upload I'll be trading currencies. So just leave a comment on the pair you want me to trade and I'll drop a video soon afterwards. So let's get on with it. Do subscribe to my channel, it would mean a lot. And if you want the Bollinger Bands strategy, go in my Telegram group. You can get there, they're there for free.
Oh no!
So here we're gonna start with volatility 100 1S. I'm going to explain the Bollinger Bands strategy very slowly and in detail. So pay a close attention to what I'm going to say here. So the first thing when you want to do when you identify in the market is that you draw trend lines. That's the first thing you do, and that will show you where the market is going to go. So by drawing the trend line, you know what kind of trend and pattern you have, whether you're going to have a flag or you're going to have a falling wedge or a rising wedge. For this instance, this is a bearish flag and it went bullish, as they all do. So after you do this, then you know that you have a flag, right? Bollinger Band is not yet in use. Most of you have the mistake of entering a buy over there where I've put the shadows on the area. Then you sharp enter and put a lot of position full margin mode there, and then it will go down. Then you blow your account and you wonder why. Then the trade will continue going up and you were correct all the time. Let me tell you something with these kind of patterns. They'll first go down then go up. Otherwise, if they all went up, we'll all be rich, don't you think? So they will first go down to hit the nearest stop losses of the early buyers, which is you, by the way. Then they'll go hit your stop loss and then they'll go up. Well, you would have entered on full margin mode, so you didn't blown by that time. So how do you know that it's about to hit this this stop loss? Well, you identify a rally based rally or a drop based drop. Any nearest resistance to the left side should be able to. If it's not there, then it will go down to the nearest resistance, the area of confluence it can find. For this instant, to the right side, that's where you find the area of confluence, rally based rally. That's where it will first hit. Then to measure your TP, I kind of just do this in most of my video. I'm sure you know by now if you watch them. I just measure this angle and then just go and put it on top of the trend line after breakout. Then boom, that is my TP. So you need to be aware of the early stop loss which is going to be taken by the market. You need to be aware so that you trade more like the professionals. You don't just enter a buy. Well, most of you wait for breakout, but that's kind of for the amateurs. What you need to do, you need to enter when it has hit the area of confluence down to the opposite, because no one in the market would be doing that. They don't know. When most of us see this, we just get excited and say, oh, it's a buy, and then we just buy. But then we blow your account because you don't know what's about to do. Because for you to identify that this is a flag, it would have formed somewhere to that extent that it will be right there. Otherwise, if not, you wouldn't have found it. So you need to either sell or wait for it to hit the stop losses of the early buyers. I'm sure you know this by now, that the market, it first hits the stop losses of either the early sellers or the early buyers, depending on the kind of trade you are trading. Okay, that's what it does. This is the 1 minute time frame. Someone was confused and he was like, why are you trading all of the time frames? I'm confused. Okay, what you do is that you find your trade on the 1 hour time frame. Let's say it's this trade, but this trade you need to make a sharp entry. You go to the lower time frame because that's when you see where price is forming. That's why you go to the lower time frame. It can be any time frame. If you're trading the 1 hour, you can go to the 15, you can go to the 5, you can go to the 1. It's okay. You don't have to be confused. That you have to analyze the different types of timelines. You can just use them for sharp entry. and to see more clear, because some trades in the higher time frame, they are not clear. You can see them more clear when you go down to the lower time frame. I hope you do understand, but if you don't, please feel free to comment so that I can try to make it more clear. So that's how I do my TP there. The first and the second, I just did the first and the second. The first, you use the space between the channel in the flag. Then the second, you just use that kind of resistance to the left, that kind of wall side, and then you can just, I'm sure you see what I've done here. While you're enjoying my video, do subscribe to my channel, help me reach 20k subs. It will really motivate me to post more content. And do subscribe to my Telegram channel. I'll put more signals, analytics, and more settings. And for the currency versions, don't worry, I'm making a videos to be dropped soon. So let's move on to another trade so that you can see, because what happens is that volatility, it follows, it repeats its patterns, it always repeats. So do make note of that, it always repeats. Right here I'm drawing trend lines. So in the first trade, you've noticed I did not use my Bollinger Bands because they were not important. There will come a time when they will be important, and I'll show you how and why. So this is a rising wedge. You have seen a rising wedge, right? Now that I've drawn and seen the pattern, you can identify the sell with the Bollinger Bands. You can notice the top Bollinger Bands there. Most of us would sell at that point. That is where we'll sell. But like I've said, it will hit the early, the stop losses of the early sellers. It will hit the stop loss by going up. So that's when the Bollinger Band will come in contact here. Look at that part on top. When it touched the Bollinger Band, that's when it started to go up. It touched the trend line and the Bollinger Band, the top Bollinger Band, and then it just started to drop. So the Bollinger Bands can kind of help you to know that it is time to sell, because it is the top Bollinger Band. You don't just use the Bollinger Band on its own. Otherwise, if it worked, we will all be millionaires by now. That's why it don't work. And most of us like to sell early. That's why you blow your account. You like to sell there. But that's a buy because it has touched the lower part of the Bollinger Band. So that's a buy. But most of us would be selling because we have notified a pattern which is a rising wedge, and you know it's gonna sell. But then when you sell, it's going to go up because you have entered full margin. It's going to hit your sell. By that time it moves 2-3 candles, you'd have blown your account. So you need to know these things. You need to identify with the Bollinger Bands that it's now time to sell. Most of the people like to sell after breakout, but some trades do not show you after breakouts. They just keep dropping and dropping and dropping, so you won't end up seeing anything or any progress. So you need to know so that you don't make this mistake. Where I'm putting my shadows on there, that's the proper entry to make your sell, because you know that it has touched the top Bollinger Band, but there is no breaking out going upwards. It has touched the top Bollinger Band, so it has to go down. This is how I measure my TP. That's the first TP, the most safest for the traders who are afraid of taking risk. That's the TP which is recommended for you. Again, I'm trading the 1 minute time frame. I can leave it up to go to the time frame. Then this is the TP which I like to use. I love this kind of TP. It has a lot of risks and a lot of profit. That's the TP which I use here. Okay, I know you're enjoying my video. Just hit the subscribe button so that you can get me some more motivation. I would like to post more content for you guys so that you can learn. So this is how I use to raise small accounts. Yes, just keep practicing, and with time you'll get it. Just keep practicing. So now that I am done with the rising wedge, you've seen, I'm going to move on to the next trade which I would have taken if it was live, but this is just past data which I'm showing you. I'm going to show you live data again when I'm trading after these kind of examples, which is the live example, so that you can get on. So this is the Quasimodo, this is the lower low, and I've drawn my higher high on the top Bollinger Band and my lower low on the down part of the Bollinger Bands there. So which means when you expect a lower low, there's a head in the left shoulder, which means there's going to be a right shoulder. So I draw my left shoulder there, and then when the right shoulder comes, I then buy. You see it went up, and most people make the mistake of buying for a long time. As I've always told you, for the Quasimodo, you don't need to buy for a long time. You just need a minimum amount of take profit, and after that then you'll be done. There's no need to compete. This is the market, okay? Once you get enough, you just leave, because you're scalping. Unless you want to hold, then that's fine with you, then go ahead. So that was a Quasimodo right there. That was a Quasimodo. There's a head, a high and a lower low. There's the left shoulder in the head. So I'm not done with the examples. Time to trade the $40 account. I would have ended this trade, but this was a falling wedge. No, it was a flag, sorry, it was a flag, and I would have ended somewhere there, because that's when it will go to hit the stop losses of the early buyers. I would have ended somewhere there, but the trade is already gone, so there's no need for me. But as I'm entering this kind of trade, you don't need to do anything. You just need to buy, because there's a lower low, which means it will respect it by retesting, then continue going up. So when I see these kind of things, I just enter full margin. I don't like to think too much. Most people would see the trend going downwards and say, oh, since it's going downwards, it will keep going down. But no, it will go up. When you see a situation like that, you just enter. Look how my money is going up, just like that. It's a sharp entry. You don't need to be worried about anything. You just go. That's a good buy over there. I've entered a sharp entry. That's a lower low, right? That's a lower low. So my TP is somewhere there. I'm sure you can see this type of pattern. If you've seen my other videos, I've always traded this. And it's so straightforward. You don't need to think about anything. You see something like this, you just enter buy, because it's going to buy. Okay, it always buys. And if you haven't noticed, this is the 1 minute time frame. You can trade the 1 minute time frame. I can trade the 5 hour. I can trade the 5 minutes, the 15 minutes, the 1 hour, the 4 hours. The pattern is just the same in different time frames, so don't let that bother you. So the first thing I always tell you when you're trading is to close, so that you can build the account. If you want to build the account very fast, you will need to close the trade and then enter again. That is to build the account so that it can accumulate more position sizes, so that it can even grow more faster. So that's what you do. As you can see, there isn't a pullback where I've entered here. It was a sharp entry, and it's going up to touch the top Bollinger Band part. When it touches the top Bollinger Band part, oh, doom is coming. It will sell, so you need to be out. You need to be out by that time, as I've done there. So I've ended again, because it hasn't touched the top Bollinger Band part. It hasn't, and it has to. It's compulsory. It has to touch the top Bollinger Band part. It has to. So I've closed my trades to build the account and end again. If it had touched the top Bollinger Band part, then my trade would have been over, but it did not. So which means it guarantees there's still more bullish power. And if you notice that when the price comes to touch the area of confluence, it will break that line, then go up, then it will come back to retest. It doesn't just retest at that moment. I don't know if you get what I'm saying, but if it does retest, it means it will continue going up with the momentum. I'm still in loss, so be careful when you enter full margin. You might blow your account, so be careful with the positions you might enter. You might blow the account. As you can see, it seems like it wants to go down, but it's an uptrend, so all you have to do is just wait. So while we wait for the candlestick to go bullish, go and subscribe to my channel and do visit my Telegram channel. You might be surprised, the settings are already there, they are for free. I've labeled them volatility. To those who don't seem to see them, I've labeled them volatility. So under volatility is where you find the settings for the volatility index. So after some minutes, you see this was my trade. After some minutes, it seemed like it wanted to retest, but it was just to scare you. Sometimes the market would seem like it's going opposite just to scare you, and you close, then boom, it's going the opposite way, and you try to close to start again, and it won't be possible. Okay, so this is volatility 150 1S index. To those who think Deriv does not accept 9 cents, you should go and try volatility 75 1S. You'll be surprised. So this is another trade. This is another trade in the 1 hour time frame. I've spotted a breakout, right? What do I always say? When there's a breakout, there's always a retest, right? So which means I'm expecting a retest. Yes, it might want to touch the top Bollinger Band part, but if there is no retest, then there is no trade, because I don't know if there's bullish power or there's bearish power. So there has to be a retest, so that I know when the retest, the candle closes inside the trend line, then I'll know if it's a fake out. So when you go to the 15-minute time frame, in the 30, you can see that it has made a powerful breakout and it's about to retest. So in the 30-minute time frame, it has touched the top Bollinger Band part. So I know most of you get confused here that the 30 minutes has touched the top Bollinger Band part in the 1 hour. Yes, and so should I sell, should I buy? In this scenario, you will always sell. Okay, you go to 30 minutes and use that. You use the lower time frame, not the higher time frame. You use the lower time frame. Okay, if you use the higher time frame, such as this one, then you use the basics, such as that after breakout there's always a trend line. Okay, go to the 30 minutes time frame and see that it has touched the top Bollinger Band part, so which means you need to sell because it's going to go down. Okay, so I enter full margin with my lots so that it can go down, then I'll close the profit. As simple as that. On the 1 hour time frame, it means there was a breakout, and for it to be accurate, make sure when you draw the trend lines, they touch the wicks, not the body. So I enter full margin my sell on volatility 100 1S index on the 30 minutes time frame, because the Bollinger Bands are about to go down. Such as that, you need to know so that you don't make a mistake. After breakout, there's always a retest, and we trade a retest. So after a lot of time, we know this was a fake out. This was a fake out. How do you know a fake out? When a trade has broken the trend line and it goes back in the trend line. If you go to the higher time frame, you would have seen that price is closed inside the trend line, meaning it's a fake out, so that the early buyers could blow their account. That's what the market does. So the Bollinger Band is the one that helped me in the 30 minutes because it had touched the upper part. So which means the upper top Bollinger Bands, which means it was going to sell. You don't listen to the higher time frame, you listen to the lower time frame at a scenario like this. And this is another trade in Boom 300. we have the same scenario just as we have done in volatility 100s. So I'm going to enter full margin on the sell here and show you why have I decided to put sell here. Okay, let me draw the trend line so that you can see that it's the same trend line. There was a breakout. Okay, after breakout there's always a retest. There's always a retest there. That's a perfect trend line, which is bearish, right? So I'm going to trade the retest here in order to know this is a fake out or not. If it is a fake out, it's going to close inside the trend line. If it's not a fake out, it's going to close outside, or yet it can just go down and then go up. So in this trade, that's why I decided to sell full margin, because it's going to go down. After breakout, there's always a retest. You need to notice the kind of breakouts. This is a perfect breakout. Okay, if you go to the high time frame, you might not see clearly, so that's why it's better to go on the lower time frames, as they might be easier, such as this one. It's not easy to see in the 1 time frame. Everything is just mixed up. So in order to see well, you go to the 15 minutes time frame or the 5-minute time frame to see better. The 30 minutes time frame is not that well. And we wait for profit. We wait for profit because it has to go down. Right there. Now we know it closed outside of the trend line. It closed outside the trend line. So there are kind of trades where it can close outside the trend line, but it will try to reach the stop loss of the early buyers. Then after that, it will continue going up. But as for me, it has proven my point for the sell, and I've already closed because I am scalping. And when you're scalping, that's what you do. So do subscribe to my channel and join my Telegram group so that you can get free signals as well as mentorship programs. You can just get whatever which suits you better.